trading this week with the 28th through September 1st. We have a pretty busy calendar. We're coming out of summer trading. Let's see if the markets are going to get excited this week to end the month, or if we just have everything coming through like our ADP job numbers, GDP numbers, non-farm on Friday, and then September officially kicks off the 4th through the 8th next week. Risk disclaimer: no other risk in trading. Please always use trade capital only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptos. You know the deal. Social media, make sure it's really me. Best place to find me is right here, youtube.com/Chris Pulver. My Discord channel, which I'll post in the chat here in just a moment, and then my verified Twitter account @RealChrisPulver. All right, take a look at the charts. Let's dive in. I'll say good morning to everybody. Jumping into YouTube.
If work ever feels like...
All right. Morning, Donna. Morning, Chris. Good morning, Jan. Paul, good morning. Linda, good morning. Nice to see everybody. And happy Monday. Morning, David. All right, so pretty wild and crazy week last week. We had a close at just around 440. We gapped up a little bit to 442. Looking at the SPY short term this morning, just kind of let price do its thing this morning, see if I can find a good trade on the morning, just not jumping right in right away. Let's see here, real time, anything. I mean, you have to jump in right away and pretty much grab that 30, 40 cents if it's going to pop up to 443. But I'm not in, so I'm not chasing. I will wait. Some resistance sitting around the 445 handle. That was a previous high. Let's go into this chart here. If I go layout for the Qs and layout for the SPY. And then I also have a little trend system as well. All right. So a bit of a buy zone this morning. And we'll see if we hold tight. All right. So like we discussed last week, just a clean chart on the SPY. If we're on the right side of this trend line, then I am looking for the markets to pick up. You know, we had that fake out on Wednesday. Thursday was a reset. Friday was a really noisy day that ended up kind of closing. I mean, if you look at the week, last week's candles, it was a pretty wild ride, right? It doesn't look like much on a weekly time frame, but, you know, intraday with Wednesday, Thursday trading, that's a long wick to the north, long wick to the south, and a big indecision candle. So we are having a bit of a gap right here to start things off. And you know, usually September is a bearish time for stocks, but that doesn't necessarily have to be the case. We could see the market stay on the right-hand side of the trend line. I do like this level above 440. You know, this previous high from Thursdays. You know, we had Nvidia earnings gap higher, and then that just faded all the way down. But if we close back above 446 or 447, I'm looking fairly bullish on the markets overall to retest the highs. So pretty straightforward. You know, we might still kind of stay in the yellow zone. It might be choppy, but I think it's going to be easier to rip faster higher than it would be to rip down. Okay, but we'll figure it out. News this week. Let's take a look at the calendar. I'm only interested really in high impact stuff. Let's see. I think that's Case Shiller. Is that right? House Price Index, Standard Poor's, Case Shiller House Price Index. That'll be a good one for Tuesday. Consumer confidence jolts, job opening, CPI for Aussie. So currency wise, got some Aussie CPI. Equities wise, that Case Shiller Composite's a big one. Jolts openings as well. Prelim CPI for Germany, CPI for Spain, ADP for the US. That's prelim GDP for the US on Wednesday. PMI coming out of China on Wednesday night. Thursday, core PC unemployment claims, so we're sneaking in another inflation data point for the U.S. on Thursday. CPI for the Swiss on Friday. That'll be interesting. I see month over month. I'm going to see if we can get a year-over-year reading for Switzerland. Again, that'll kind of allude to what they're possibly doing in September for the rate decisions. I'd like to see a technical low on a lot of the Swiss pairs. Well, I guess Swiss yen would be a high, but I think Swiss in general, I'm looking for lows to form. CAD GDP, not CAD employment news. We don't have the double whammy on Friday, but we have CAD GDP, and then we have non-farm unemployment rate and average earnings on Friday morning, and as well as the manufacturing PMI. So we're wrapping up August, full week of trading, September 1, and then we'll be in a full September in the next week. So let's get cracking. All right. Nice to see everybody this morning. I will post for anybody that's coming in new or watching this recording. Let me post a Discord chat, Discord channel. There we go. And we'll have a look at everything. So I'm going to look and see if perhaps we have a gap fill this morning. Let me bring up my little drawing tool. So if I start to see some price action turn bearish, from 442 down to a gap fill at 440, that may be a play this morning that I look at for a couple of dollars, something in this area. If we fill the gap, something like this. Or what price has been doing recently is it creates a gap and it comes back and finds this gap and then goes higher. So we are technically, just look at this 1 minute time frame. We are showing a buy zone. I don't have a ton of huge levels to the upside. My biggest level today is 436. But they are starting to line up to the upside, close at 440. We could get, that means high side potential at 445, low side potential at 440 or 435, 436. As far as like a $4 to $5 move, here's the average. We're looking at about 465 average on the SPY. So it doesn't always get to 465, but I think it's safe to say that we're getting, a lot more commonly a $4 move on the SPY. The Qs averaging 569, so I'd say, we can expect to see something close to $5 day to day if you're trading the Qs. All right, so I'm going to keep an eye on that on the smaller time frames, see if there's something worth trading. Watch this on a 1 minute, see if I get some confirmation to buy or sell. A buy trade would probably come back into this gap, look for a bounce and see if we can go higher. Maybe grab right there was maybe $1 or something like that. So that's a 442 to 443 and change. So it's about $1.20. Obviously, I'm looking for more than that. As far as mapping out my day, a couple ways we could play this. There's the close from Friday. We've already pushed up 322. So if we push up another 80 cents to another maybe $1.50, that puts us up near 444, 445. If that's our high of the day and we just end up going down, then we're going to end up filling the gap. That's 322, and we push down into maybe some fresh lows for, let's see here, we'd have to get to like 438.50 or 437 on the day. So I'm showing buy zone. I'm gonna look to kind of get a dip. So if we come into the gap a little bit, stay bullish, maybe look for a fresh high in the morning, see if I can grab something short term. As far as big open interest levels, and feel free to type in some questions there in the chat. I've got the YouTube channel up on my other screen. Let's go open interest for the week. I'm looking at this Friday's expiration, not just single day. I want to see if these contract sizes get a little bit bigger as summer trading is wrapping up this week. So let's go option prices, and it's going to be September 1 expiration. Let's check the big open interest levels. Okay, so 450, 440. That's a big difference. And guess where we're trading right now? 443. So any big changes to open interest? So basically between 440 and 450, we have a 455 or 445 sprinkled in there as well. Those are my big open interest levels. Bulls, I'm sure that bulls can run at 450. I think the bears might hold and actually, retest, but maybe that's the line in the sand is 440. If we have a hard time breaking back below 440, again, just going back to my chart to keep this nice and clean, 440 is right here at the top. Okay. If the bulls keep price elevated above this, that's a pretty easy trade to the upside. If the bears crack into the yellow and keep the pressure on, then we can come back and retest the lows. If we go back into this low of the yellow box, that's our 38% fib. So it's a pretty easy, to me, it's a pretty easy decision for the week. If we're above this 440 zone, I'm looking to buy. If we're back inside 440, then we can favor some selling. Okay. And as we start things off, I don't think there's any reason for us to just jump in and force. And I think that we just let price kind of make a clear run and we trade it. Okay. All right. That's the SPY. I'll keep an eye on that this morning. And let's get to some currencies. I'll switch it up here. So somebody mentioned, we have 6 weeks in a row of dollar strength. 1, 2, 3, 4, 5, 6 weeks in a row dollar strength. That's great. Doesn't mean that we have to fade from there. No. I mean, we could have 7, we could have 10, we could have 11. We've had streaks like that before, like this run 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We had 12 candles and 10 were bullish, 2 were bearish. Okay, so I mean six is decent, especially for a summer range. I could see maybe a 7 week run before we start to see some topping out. This 13, we're sitting at 13,000 right now. We had called that level out for the last couple of weeks, last really couple of months. I do like how far away it was from the 200 EMA right up here. The dollar was way, way, way distance. I mean, 9 to 10%, that's a long ways away for a currency. We don't have a high bar count as far as, when price touched the 200 EMA, but we did have a distance move away from it. And that tends to see things snap back. So I'm still believing that this, equal low here, possibly equal highs, just a little bit higher, that, some dollar resistance and dollar weakness will be coming in. We should keep a close eye on that because I think your dollar index is also how you start to see a run in the equities market. If we see dollar weakness, that to me is a better sign for risk on trading. Go to the daily. Dollar might continue to dominate this week with another drift higher. We might still get back in this yellow box area. We go to the DXY. Same type of thing. Looking at this yellow box between 105 and 106, we come up to that area. That's a nice little stretch for the dollar. 1, 2, 3, 4, 5, 6 weeks in a row. If we go 7 weeks of bullishness, get us into this 105, 106 zone, I will start to actively look for some topping patterns. Okay. Oil, bullish on, and I'd said this the last couple of weeks. Once we had that pullback, we had 3 weeks of pullback and corrections in oil. I said watch for 78 at the 200 EMA and watch for 75. Looks like the 200 EMA, which was resistance here since around August of last year. Wow, that's so seems like so long ago to have oil just do next to nothing, and then finally we started to get this sneaky little breakout to the upside. So oil bullish above 78, bullish above 75. I'm looking for oil targets to hit $90 to $95 this year. Gold and silver, again, we have to watch the dollar. If the dollar gets weaker or the dollar gets stronger, then expect the opposite in gold. So dollar strength equals gold weakness. I'd love to get some gold at 1830. Dollar weakness, gold strength. Do I think gold's going to break above 2100? I don't know. We probably have to have some pretty nasty stuff geopolitically, or inflation is going to have to rear its head again for I think gold to make kind of new highs above 2100. But watch the dollar. Silver. Silver's been outperforming gold. We haven't taken out a high yet, though. I still like silver in this bullish channel. I'm still staying bullish towards 29 to 30 bucks. And that's it. Just going to accumulate there. Bitcoin, no chart alarms. We're still sitting in this potential bear flag. So vulnerable and kind of hanging on by a thread. So vulnerable here for more pressure to the downside towards 20K. I did say that if we get a strong like daily close above the 200 EMA, which would be around 28,000, that perhaps we come back and retest. We have channel support, or I should say trend line support. We did break that trend line, but sometimes a break, pause, and then a reclaiming, that could be a bottom, right? We close below the trend line, get back above it. That's where a buy zone still kind of shows that it's in control. So if we close back above, eat into this pocket at 28,000 plus, then let's see if we get another run towards 31 to 32,000. Okay. All right, good stuff. That covers kind of a lot of the major sets. Let me check and see how we're doing on some sectors. Anything that stands out. So let's go year to date and see who's really killing it. We know that communication services, consumer, actually it's mostly communication services technology doing most of the heavy lifting for the first half of the year. A lot of the gains might be priced in. Maybe it's, I don't know. It could be tough sledding for the rest of the year. We might have a rally. We might have a broader market catch-up trade. Energy clawed back. Year to date it's in green. The last month especially, energy's been like the only performing sector. That's quite a bit of a contraction, right? Everything in red, energy is not. The last 3 months, energy has kept pace with consumer discretionary, consumer services. Industrials making a big comeback as well. So some of the sector rotation that we've seen has been energy and industrials. Okay, if you're curious what those are, just click on this and expand the sector. You can see the percent holdings of what weights it. So Caterpillar, Union Pacific, Boeing, Honeywell, RTX, UPS, General Electric. Those are all huge companies, right? I mean, all these are huge companies. The weightings in the sectors are kind of ridiculous. If you go into energy, ExxonMobil's 21.4%, Chevron 18, Schlumberger. We've traded this one quite a bit the last couple of years. Only 5.26, but you've got just major big energy, MPC, COP, just all these crazy big companies. But it's, again, what's the overall sector doing? Look at ExxonMobil. ExxonMobil has really been in a topping range for the last 6 months. So once we had this big run, I mean, we're just kind of maintaining levels around 100 to 120. So it's clinging to the highs. We're still in a nice little buy zone off this 200 EMA. ExxonMobil, if we get another run in energy, ExxonMobil could come back and revisit 119, 120. Is it possible that Exxon makes new highs? If so, then XLE, I'm not drawing that very well, but XLE could continue to, perform pretty well. Okay, so we'll keep an eye on the sector stuff for some rotation. Open interest levels 440 and 450 on the SPY. News this week, we understand it's ending the month, beginning the month. Non-farm payroll on Friday. Jackson Hole is a bit of a wild ride last week, even though Wednesday was not Jackson Hole. It just was like a pre-Jackson Hole move, and then Thursday, Friday. Powell's message was about the same. The market didn't really have a huge reaction to it. I mean, it was just kind of a sell-off through the morning. So this would have been Friday was right here. This would have been Friday's trading. So drop, came down towards 435, came all the way back up towards the end of the day and finished right around that 441 handle. And then we're gapping open today. So like I said, I'm going to put this in my Delta Trader Telegram. I'll put this in the analysis section for my Discord. I think that if we stay above 440, I'm favoring longs. We get back below 440, back inside this yellow box, we're favoring some corrections back into previous lows. 435, 433, and our 430 level would be the 38% fib. So that's pretty straightforward. And honestly, after last week's kind of, head fake Wednesday, Thursday, it does make the numbers and the analysis a little bit cleaner. So I would say risk on here, risk off here. We'll keep an eye on the dollar as well. And we'll see how this first week, wrapping up August and kicking off September, unfolds. Okay. Any questions for me this morning? Yeah, thank you, Donna. Thanks for that. If you would, if you're watching this live or watching this video, if you hit the thumbs up button for me, I'd appreciate it. Support the channel. I also want to throw out something. So I talked about this a little bit last week. I don't know if it's my trading rooms or maybe Friday's live session for the YouTube channel, but basically I'm looking at building out some video series and plural, and I wanted to see what type of subjects all of you would like to see. I mean, you're more than welcome in the free chat group and Discord to let me know what you'd like to review, in YouTube as well, what you'd like to review. But I'm thinking of doing like, anything between like a 3 and 5 video series and have it on a particular subject, keep the video short and sweet, and just make them for like a little rental price. I mean, I can build it out through a Vimeo library. You can rent or download. I'll pretty much, keep the price. It'll be like a, like an Amazon rental or something like that, where you can rent it, you can have it, download it. I don't care, but nothing crazy expensive, but just a little bit of content for, you want to discuss something specific in Forex, analyzing Forex charts, finding big pattern trades, or, the macro picture of Forex, or how to analyze charts, or what's my daily routine, or talking equities, trading options, some basic strategies. I mean, anything content wise is fair game. I put a lot of stuff in my YouTube channel. My Keep It Seriously Simple video series is pretty timeless and evergreen content. But I'd like to get a little bit more specific and also not go as long. I'd like to keep the videos shorter, anywhere from like 8 to 12 minutes. And if I did a little video series, like I said, 3 to 5 to make kind of a course or a strategy, or at least something on the subject that would give you some start to finish, get you up to speed on something really quickly, teach you something new, or certainly refine and modify something that you've been struggling with. So like I said, open to suggestions, and let me know how I can help. So you're feel free to type it in the YouTube session. I'll check the comments. Feel free to type it in the Discord in the free chat section, and I'll start looking to build out some extra content. Okay. And once I do that and I get video links and stuff like that, I'll share that everywhere that I can and have at it. Okay. All right. So let's take a look at some currencies. Currency strength chart. Things are pretty quiet. We had Aussie New Zealand strong overnight. The JPY is weak, but on the vertical axis, still pretty quiet overall. I would expect that volatility is going to open up a little bit through the week. I mean, naturally, we're going to get more volatility than just 40 to 25 and 40 on the vertical axis. But currency wise, I mean, I have a lot of the same outlooks. I mean, my direction hasn't changed a bunch. As far as my bigger directions, I mean, I'm still looking for Swiss pairs to bottom, or Swiss yen to top. Big baskets, and I've talked about this a lot in the trading rooms. Swiss basket's a big one for me as far as positioning. Yen basket, if we get some confirmation, it might be a very slippery currency pair, but could have some fantastic setups and patterns, and bigger picture moves where we could be talking. I mean, I think 500 to 1,000 pip moves are very possible on a lot of the Swiss pairs. 1,000 plus pips with the nature of the volatility of Japanese yen. So we could have thousands of pips on the Japanese yen. The dollar, I think if we have dollar weakness, especially, I think the market's going to run with that very quickly. And I say that because right now the dollar is one of the top yielding currencies in the market. So I've experienced this back in 2013 and 14, experienced this a little bit in 2017, 18. Throughout the years, when we go from like a lower volatility, carry is king, and there's positive swap, a lot of the markets in a slower volatility environment will favor the higher yielding currencies. But when they go into like some type of risk off trading, or the other currency like the Swiss or like the yen that are on those lower ends, right now the yen is like the least swap, right? Like it's negative 0.1%. So if we go to the JP 10 year, not the OY, the JP 10 year, there we go. We're floating at 0.66 right now. So all that discussion of like the 0.25 and all this BOJ control, it is floating in what you might argue like the free market. Now, if the Japanese 10-year government bond gets to 1%, 100 basis points, what implication does that have for the Japanese yen? I truly don't know, because we saw the Japanese yen have lots of intervention, and directionally, like, we didn't really have an answer, right? We had an extremely weak Japanese yen, extremely strong Japanese yen, and the 10-year really didn't do anything. So now that we could be getting up into this space, does a 0.6% move to a 1% move, does that change the stance of the Japanese yen as far as where the interest rate's going to be? I mean, if we go from -0.1 to, let's say, a quarter of 1%, I don't know, like, would that cause a massive repricing in the yen because we go from negative swap to positive all of a sudden? Possibly. So, I don't want to really use this as my main barometer. I want to keep an eye on this, because if it keeps drifting higher, there's going to have to be some type of setup I would think would come to fruition on the Japanese yen. But as far as the technicals go, there's just some pretty fantastic setups. I mean, I like mainly the euro yen, pound yen, Swiss yen, dollar yen. I like those the most. The CAD yen, we could still have some good structure in this one, where we come back to equal highs around 110. So I'd love to see something like this. If we come back to equal highs or even slightly higher highs, this 110, 111, then form a topping pattern, that would be an excellent way to trade this thing, right? Just poke these highs, have it be a fake out, then 111 all the way back to 94. That's a 2,000 pip move. And we don't have to just guess where the top is. We can find a pattern. So if we find a pattern, it'd be a great trade. Okay. Euro yen, pound yen, and Swiss yen. I have pending stop sells on a lot of these from my flex trading room. We have this one pretty low. It's like 155.50, but we're keeping it out of the way for right now. And the goal is to, if price drops back down, catch a little bit of this run right here, poke this low, get a topping pattern, and then look for some follow through. So we're going to kind of position ourselves to get a little chunk of any high volatility, and then try to reposition ourselves for a bigger swing in a pattern trade. Okay, pound yen, same thing. Looking to see if we end up dropping aggressively down to this low, grab some of this heading back towards the 200 EMA, look for a topping pattern. And pound yen is notorious for head and shoulders. So if we come back here, create a head and shoulders, I didn't draw that very well, but if we come back here, create a neckline of some sort, then right shoulder, and off we go. And this could be, a big, big, big drop. So I will be watching yen pairs closely. I've essentially avoided them this year outside of being long. We've taken some stabs. We made some decent, safe profit trading what we see, trading short-term time frames, not getting caught up in like dollar cost averaging or trying to call tops on the yen. That's obviously a difficult move. It can penalize you in a big way. So confirmation for starters, patterns for starters, stop losses really important, and if we're right, we're going to get rewarded really well. Dollar yen, same thing. Could have a really nice setup for a topping pattern. If we have it, it'd be right in here. If it holds this kind of 145, 146, rolls its way over to the right-hand side of the trend line, we could start this way. Take a run to 138, pattern forming here, and then make our way back down towards the lows we had in that correction zone in January. So we'll see. But big setup opportunities. I think the JPY looks good. I think the Swiss looks good. And obviously, as we get through summer trading, it's time to kick off in September. Now it's looking ahead to see where are things going to be positioned for the rest of the year. One thing we should talk about in the trading rooms this week is let's start looking at some yearly pivots. If we have any yearly pivots that are available, like the CAD crosses, Euro CAD to the downside, Pound CAD to the downside, CAD Swiss to the upside. A lot of those yearly pivots are still available. Dollar Swiss is available, right? So some of those might be hit. I mean, yearly pivots are hit more than they're not. All right. Okay, it's 10 o'clock. I'm going to wrap up here for the YouTube session. Like I said, feel free to type in, if you're in here live, type in the comments or use the Discord channel, use the free group chat thread, type in some subjects, and I'll start getting after some content in the next couple of weeks. And thanks for being here today. Thanks for being live. And if you're watching the recording, check it out. Appreciate y'all being here. Hit the thumbs up button for me to like the channel and support the video, all that good stuff. And if you have any questions, let me know. Okay, thanks a lot. Equities on demand students. I'll see you in a couple minutes. All right, thanks. Bye.